What's up, guys? Welcome to Ipdax, and today we're going to be going over SMT, which stands for Smart Money Tool or Smart Money Technique. All right, so before we go into what SMT is, let's go over asset class correlation. So SMT works with asset classes or pairs that are either inversely or directly correlated. And examples of directly correlated asset classes are EU and GU, or NASDAQ, S&P, and the Dow Jones. And basically the symbols for those would be NAS 100, SPX 500, and US 30. So all of those are directly correlated asset classes. And then examples of inversely correlated asset classes would be DXY and GU or DXY and EU. And then for directly correlated asset classes, we expect each pair to move in sync. So when one is making a higher high and higher low, we expect the other directly correlated asset class or asset classes to also make higher highs and higher lows. And then when one is making lower highs and lower lows, we expect the others to also make lower highs and lower lows. And then for inversely correlated asset classes, we expect a higher high and a higher low to be matched up with a lower high and a lower low. So in the next slide, I'll go over kind of what that looks like pictorially, and then after that, we'll take a look at some examples from the charts. All right, so right here, let's imagine that this is NASDAQ, and then let's imagine that this is S&P 500 or ES. So let's say that NASDAQ is moving like this. So since these two are directly correlated, we anticipate that S&P should also move like this. Now, so in this example, we see that the higher highs and lower lows are all matched up, right? So when one makes a higher high, the other one is also making a higher high. And then when the other one is making a lower low, the other one is also making a lower low. Now, where we get SMT is, for instance, let's say that NASDAQ is moving like this, and then ES decides to move like that. So here, we see that here it's making a higher high, but here it's failing to go higher. So that means that the S&P 500 is weaker than the NASDAQ. And then when we have SMT on the highs, that signals that price should be going lower. So I'll just write that down here. SMT on highs signals lower prices. All right. So that's what we're seeing here. So we see that these two asset classes are supposed to move in sync. So when one is making a higher high, the other one should also make a higher high. But we see that there's a failure from S&P to go higher, which is an early indication that the S&P is weak and that the markets could turn around. And then we see lower prices from there. And then let's take a different example. So let's imagine that we have EU here, and then let's imagine that we have GU over here. So these two asset classes are supposed to also move in sync. So when one is making a lower low and lower high, the other one should also make lower lows and lower highs. So let's imagine that EU is going down like that, and then price goes up, and then we see that GU is going down here, and then we fail to go lower. So that would be an indication of SMT as well. So this low was supposed to come lower. Like right here, we see that price comes lower, takes out that low. But here, price should have taken out that low, but it fails to do so. So that means that there is an early indication of strength in the market because GU is failing to go below that low, which means that GU is stronger than EU, and that's an early sign that GU is stronger and that there's some incoming strength in the market. And then how I said SMT on the highs signals lower prices. SMT on the lows indicates higher prices. Indicates higher prices. So that's what SMT amongst correlated asset classes looks like. And yes, sometimes price will kind of make equal lows as well. But the idea is that one takes out the low and then the other doesn't take out the low. So sometimes we can see equal lows, and then sometimes we'll see a higher low and then a lower low on the other asset class. But the idea is that one is taking out liquidity and then the other is failing to take out liquidity. And that's where the idea of SMT kind of lies. So let me clear that out. And now let's take a look at what SMT amongst inversely correlated asset classes looks like. So let's imagine that we have DXY here, and then let's take GU over here. So let's imagine that this is what price action looks like on DXY. And then if you guys remember from the information on the last slide, we know that these higher highs and higher lows need to be matched up with lower highs and lower lows on the inversely correlated asset class. So here, the correlation is inverse, right? These two have an inverse correlation. So we see lower highs and lower lows, right? Lower lows, lower highs matched up on both DXY and GU. Now, where we get SMT is, let's say that price is moving higher on DXY, and then we get something like this on GU. So when we take out a high, we anticipate that price should want to take out the low on the other asset class. But when we fail to take out that liquidity, when we see a higher high on DXY, but we don't see a lower low on GU, that's an early sign that, there's some incoming reversal, or, some incoming opposing price action that's going to come into the marketplace. So we see that price is taking out liquidity here, and then we see that price fails to, do what is expected. So that's an early sign that price is being manipulated. That's the word that I was looking for. So it's not moving as we would expect it to. So these two are inversely correlated, so they should be moving opposite. But when one is moving higher and then the other starts to move higher as well, that's an early sign that there's some manipulation taking place in the market. All right, and then let's imagine, for instance, that price was going lower on DXY. So what we would expect is for price to go higher on GU. But if we got something like this, where DXY is moving lower, right? Lower highs, lower lows. And then we would want to see EU or GU also moving higher. But we see something like this, then that's also a sign of manipulation. So this low got taken. So ignore that last drawing right here. So right here, we see that low gets taken out, and then we anticipate that this high gets taken out on GU. But when we don't see that, and instead GU makes a lower low, then that's also the SMT on the highs for GU. And that signals that maybe GU is going to go lower. And then that signals that maybe the dollar index is going to go higher as a result of that SMT and the manipulation that's coming into the marketplace. So that's what SMT kind of looks like just when I draw it in. But now let's take a look at live price action and see what that looks like. All right, so right here, let's take a look at the lows. And then this is between EU, and then this is DXY. All right, so when we're looking at inversely correlated asset classes, we look at the lows of one asset class and then the highs of the other asset class. So here, we anticipate that when dollar index is moving higher, we anticipate price to want to move lower, but we don't really see that on EU. So what we see here is that the dollar index takes out liquidity on the highs, but EU fails to take out that low. So that's SMT. And in this example, we don't really get a run higher, but you can see that price changes its state of delivery from going lower and then transitions to going higher. Now, this is on the daily chart, so this would have been a couple hundred pip run, and you could have potentially capitalized on that. But not every SMT will, lead to these large price runs. It's just an early indication that there might be a change in the state of delivery that's going to take place in the market. All right, so that's a example of SMT amongst inversely correlated asset classes. Now let's take a look at what SMT looks like amongst directly correlated asset classes. All right, so this is NASDAQ, and then this is ES or S&P. And then as I mentioned earlier, when one is going higher, we expect the other to also go higher because they're directly correlated. And then when one is going lower, we expect the other to also go lower. And then we anticipate those higher highs and higher lows to get matched up. And then we anticipate these lower lows and these lower highs to also get matched up, like so. And then what we see here is that this low right here and this low right here happen at that same time. And then this low on ES is actually higher than this low right here. So on NASDAQ, it's taking out liquidity, but on ES, it's failing to take out liquidity. So that's an early sign that there's some manipulation taking place in these markets, because ideally we want to see them move the same way. So when one is going lower, we expect the other to also go lower. But when one fails to do so, that's kind of an early indication of manipulation. And that also tells us that there's a potential for a change in the state of delivery to take place. Now, there's also this other example of SMT as well. So notice how this high is higher than that high, but on NASDAQ, this high fails to take out this high. So that's also SMT. SMT, and then we see that price kind of changes its state of delivery and then transitions to going lower on both of these asset classes. So yeah, that's pretty much what SMT is. And just to quickly recap, when you have a directly correlated asset classes, you anticipate them to move in sync. You anticipate them to both, if they're moving higher, you anticipate them to have higher highs, higher lows. And then if they're moving lower, you anticipate them to have lower lows and lower highs. And that's for the directly correlated asset classes. And then for the inversely correlated asset classes, that's a little bit trickier to learn. So when you have one moving higher, you anticipate the other to move lower. And when you don't see that happening, that's a sign that there's SMT or manipulation taking place in the markets. And then after that, you would potentially look for a reversal to take place. Now, SMT by itself doesn't mean anything. So don't go into the charts and then every time you see SMT, you try to, take a reversal trade. Don't do that, because SMT on its own doesn't mean anything. But when you blend it with other things, that's when you get these really powerful trades. And also when you blend SMT with key levels. So for instance, you see, let's say that price moves up here, and then it goes like that on one asset class. And then we're taking the example of the directly correlated asset classes in this example. And then you see SMT like this happen at a key level, then that's a high probability scenario for a reversal. So you want to blend SMT with other things that you already know, and you don't want to trade it by itself. But yeah, so that's pretty much everything on SMT. I hope that this video was insightful, and I'll talk to you guys in the next one. Cheers.